So the market performance so far has been driven primarily by the performance of 7 large cap companies. Now, these are 7 large cap high-tech stocks in the U.S. that focus primarily on digital technology like semiconductors, artificial intelligence, software, and even electric vehicles. Now, in this episode, we are going to discuss how you as an investor can navigate this market as it seems to broaden beyond these high-tech, large-cap technology companies. We've recently seen other parts of the market performing well, including small cap stocks and value stocks. And adding to this rally, recent inflation data suggests that the Fed may even be cutting rates as soon as September, and that would certainly provide a major boost to certain parts of the market. Now, when we talk about parts of the market, you can slice and dice the market a lot of different ways. I'm sure you've heard of large cap, mid cap, and small cap stocks. And this simply refers to how large a company is based on the total value of shares of stock. Another way to view companies is by their valuations and potential for growth. Value stocks typically have a lower price to earnings ratio and are considered to be undervalued by investors. Conversely, your growth stocks typically have higher price to earnings ratios and have a higher potential for future growth. Now, there are certain types of companies that fall into these categories. Value type companies are usually your more larger, more well-established companies that pay dividends. So investors in a value company or buying value stocks are looking for capital appreciation as well as dividend income. Growth stock companies, on the other hand, are usually newer companies, and tech companies certainly fall into this category. Quite often they're smaller companies, and they are borrowing a lot of money so that they can fuel this growth, and they don't typically pay dividends. So investors in growth stocks or growth companies are really just looking for capital appreciation. Now, markets will shift between growth and value or somewhere in between, and this is certainly a trend that we monitor very closely when we are tactically managing a portfolio. Now, investing trends come and go, and the question is, how can you as an investor understand the current market and economic environment while taking advantage of long-term market growth? First, this chart shows the performance of different styles and factors across the market, with returns indexed, or I should say re-indexed, to zero a year ago. And it illustrates that though broad stock market indices have performed well, there is variation in performance for different sizes and styles. Your large cap tech stocks have gotten a lot of attention for their strong performance, really thanks in part to demand for artificial intelligence, and then also the Magnificent Seven stocks, which gained over 190% over the past 18 months. Now, as you can see from the chart, other areas of the market are now beginning to participate in the rally. You can see where you have large cap growth, mid cap, large value, and the small cap. They're all participating. So improving inflation and the increased likelihood of approaching rate cuts have spurred both small cap and value stocks in particular. Small cap stocks, for instance, they tend to benefit when rates decline because they have more limited financing options than those larger companies. They also tend to be more U.S. focused, so positive economic news can disproportionately impact their stock market performance. Next, this chart shows that growth stocks are outperforming value stocks right now, but it has not always been this way. Growth and value have traded leadership over the years quite a bit. Now, the chart here tracks the returns for the Russell 3000 growth, value, and standard indices indexed to zero in 1995. The blue shaded area represents the spread between the growth and value returns. And you can see here, growth stocks outperformed in the late 1990s and early 2000s. But when the dot-com bubble burst, value stocks took over for much of the 2000s. The strong demand for technology stocks over the past year ushered in a new wave of strong growth performance, with the exception of the 2022 bear market. The performance difference between value and growth have been the source of much academic research over the past several decades. The key for investors is that both are important for diversified portfolios because it's quite frankly very difficult to predict what might drive the next stage of the rally. Finally, the bars on this chart show the next year earnings growth estimates broken down by size and style. The black diamonds show estimates for price-to-earnings ratios over the next 12 months. Despite the recent broadening in the bull market rally and volatility in growth and value stocks, valuations still differ significantly, with value and growth trading leadership over the past year. Large cap growth equities have by far the highest estimated price-to-earnings ratio over the next year, following strong growth performance year to date. Since expected returns are highly dependent on valuation levels, it's important to diversify across other styles as well. Small cap value, as an example, has a much lower valuation ratio, even though investors expect earnings growth rates comparable to large cap growth stocks. All of these charts highlight the importance of diversifying across different styles in a portfolio. While there is still market enthusiasm for large cap tech companies, investors who hold different parts of the market can benefit from all of these opportunities while ensuring that their portfolios are aligned with their long-term financial goals. Now, I hope you found these high-level insights helpful. If you'd like to discuss them in more detail or would like some more information, please drop me an email at bud.milligan@milliganwm.com or visit my website at milliganwealth.com for more articles, videos, and tools. Also, don't forget to subscribe to my YouTube channel for future videos on market and economic updates, as well as other important financial topics.